Tit-for-tat tariffs spark a global market sell-off as investors fear a recession is on the way. And as the trade wars heat up, pressure is mounting on both US consumers and producers. Meanwhile, Europe quietly locks in vital mineral deals in Uzbekistan. Hello, I'm Taiba Aydin and you're watching Money Talks. Stocks around the world are in freefall following US President Donald Trump's sweeping global tariffs. US stocks suffered the most on Thursday with the steepest decline since 2020. The tech-heavy Nasdaq plunged 6%, falling into correction territory with the so-called Magnificent Seven stocks, which include the likes of Apple, Amazon and Meta, collectively losing a whopping $1 trillion in market value. Japanese stocks led losses in Asia, with the Topix falling by as much as 5% before pairing losses. European markets also plummeted. The regional Stoxx 600 index fell more than 4%, with banks down almost 10%. Meanwhile, the dollar slumped by as much as 2.6% against the euro, its biggest intraday plunge in a decade, and suffered sharp losses also against the yen and British pound. As Trump tries to reshape global trade norms, he insists that the American economy will rebound. But now comes word that Trump may be willing to negotiate. Andy Rosejan has the latest.
As U.S. stocks cratered on Thursday, the biggest one-day drop since the COVID-19-induced sell-off of 2020, the White House insisted that Americans should simply trust President Donald Trump on his decision to impose tariffs on 185 nations, and that there would be short-term pain for long-term gain.
I think it's going very well. It was an operation, like when a patient gets operated on. And it's a big thing. I said this would exactly be the way it is. The markets are going to boom, the stock is going to boom, the country is going to boom.
The tariffs produced some immediate effects on major U.S. automakers. General Motors announcing Thursday it would hire around 225 additional American workers to beef up manufacturing, just as Trump has wished. But Stellantis announcing it is laying off around 900 American workers. And more questions are emerging. Why was Russia left off the tariff list? The White House says there is simply no meaningful trade with Russia anyway because of sanctions. But the Office of the U.S. Trade Representative still lists about $3.5 billion in U.S. trade with Russia. And Iran is under even harsher sanctions, yet it too is on the tariff list. And is the White House willing to negotiate with individual nations to get tariffs reduced or dropped? For days, the administration made clear that the tariffs would be permanent. But Trump indicated Thursday he is willing to make deals, even suggesting that China could get some tariff relief if it offers a favorable sale of TikTok to a U.S. company.
And the rest of the world wants to see, is there any way they can make a deal?
If he's going to do it, country by country, bilateral negotiations, some sort of calibration to where they are versus us, that's a time-consuming process, and one that will not quickly alleviate the pain on the American consumer and the business community.
And while there is significant fear in America, investors worried about markets, consumers worried about prices, and Republicans worried about the political fallout, the head of the International Monetary Fund now says that tariffs also pose a significant risk to the global economy. Andy Rosejan, TRT World.
World leaders have been reacting to Trump's announcement of the sweeping tariffs. European Commission President Ursula von der Leyen has come out opposing the tariffs and believes this will have immense consequences on a global scale.
President Trump's announcement of universal tariffs on the whole world, including the European Union, is a major blow to the world economy. I deeply regret this choice. Let's be clear-eyed about the immense consequences. The global economy will massively suffer. Uncertainty will spiral and trigger the rise of further protectionism. The consequences will be dire for millions of people around the globe, also for the most vulnerable countries, which are now subject to some of the highest US tariffs.
The unilateral action that the Trump administration has taken today against every nation in the world does not come as a surprise. For Australia, these tariffs are not unexpected, but let me be clear, they are totally unwarranted. President Trump referred to reciprocal tariffs. A reciprocal tariff would be 0, not 10%. The administration's tariffs have no basis in logic, and they go against the basis of our two nations partnership. This is not the act of a friend. Today's decision will add to uncertainty in the global economy, and it will push up costs for American households.
We're in a situation where there is going to be an impact on the U.S. economy, which will build with time. In our judgment, it will be negative on the U.S. economy. That will have an impact on us. But the series of measures will directly affect millions of Canadians. We are going to fight these tariffs with countermeasures. We are going to protect our workers, and we are going to build the strongest economy in the G7.
And in retaliation to the US's 54% tariffs on Chinese imports, Beijing has hit back with its own 34% levy on all American goods starting April 10th. Let's unpack all of this now with Mario Arturo Ruiz Estrada, Professor of International Economics at the University of Kuala Lumpur. And in Taipei, we have Ross Feingold, former Asia Chairman at Republicans Abroad. Welcome to you both. Now, let's start with the immediate reaction of financial markets. Mario, stocks have tanked across the board. How will markets navigate the fallout from Trump's trade war?
We need to remember that the tariff is interconnected with also the financial markets. You need to know that investments from different companies, American companies and overseas, is very high. But now the American government want to bring the investments, and the FDI, they invest in different parts of the world, return to the United States. Assuming that with this return of capitals, it's going to generate a new boom in the American economy, that I fully disagree. First one, we need to see the productivity of the United States compared with China. I have read many times, it's very low compared with this. Second one, the United States depends from, be honest with you, with illegal workers. No profit, it's very expensive, the labor in the United States. And who are doing the jobs is the Latinos who arrive to the United States and work hard in agriculture sector, manufacturing sector. And I don't know what is the idea to put tariff now, what is at the critical time that we're going to have economic recession. But we are in economic recession. We can see very clearly in the stock markets. And one more thing is maybe scary. It's like this tariff become an extortion, political extortion to the country that if you not follow the game, you're going to need to pay the high cost using the tariff. Tariff is something commercial. It's not your political instrument to manipulate and take power in this way. I disagree completely that we need to know that tariff become like a gun that can put repression on the countries. If you don't follow all the things, then you're in big trouble with the tariff. And this is I cannot find any logic, like economist I am.
Right. Now, Ross, China has followed up with its own set of tariffs. Was this expected, and what impact could this have?
It's no surprise that China has imposed reciprocal tariffs. They did this in 2018 when then President Trump began to initiate higher tariffs on goods from China. So the United States and China, in the bilateral trade relationship, they're used to this kind of tit for tat, I raise your tariff, you raise my tariffs kind of situation. Really, the interesting to look at with regard to the U.S.-China trade relationship, because it's so large and it's so important to the economies of both countries, is are both sides willing to negotiate? And if so, when will that negotiation begin and when might it conclude?
Right, and ultimately, who will be the winners and losers of this trade war?
Well, typically people say there's no winner in a trade war. If the United States and China could reach some kind of accommodation, then there could be winners on both sides. From the United States, one of the key sectors that wants to export to China is the agricultural sector. But if China's implementing higher tariffs on American agricultural goods, then the U.S. Producers will lose that opportunity, and the buyers or the importers in China will begin to buy or import agricultural products from other locations around the world, such as Brazil and other options that China might be able to develop. So certainly there's one key sector off the top of everyone's head is the agricultural sector in the United States, which could be a victim to a prolonged trade war.
Right, and other trade partners will likely hit back on the US. What will President Trump do in that case?
Well, there's two options. One would be to enter into negotiations with those countries and hopefully reach a deal that's advantageous for the United States as well as for the importing countries. The other options, which was used in 2018, specifically with regard to the American agriculture sector, was to provide subsidies to exporters who were hurt by tariffs on the imposed by the importing country. It's a little bit early to guess whether or not the United States government would offer large subsidies to American exporters. It's probably easier to guess that a lot of these countries will, in fact, try to negotiate a new deal with President Trump and the American government, which will facilitate lower tariffs and a resumption of normal trade ties.
Right, now, Mario, let's go back to you. How far could this trade war go? As Ross mentioned, we did see this play out back in 2018. If these tit-for-tat tariffs continue, what can we see happening?
It's pathetic to see this situation we have. We're going to generate a more inflation, a global inflation. The effect of tariff is domino effect. Meaning, if I increase my tariff, I'm going to increase and not going to have end. And I'm mainly worried that this one is become worse and worse. But it's not only affecting the world, also affecting the Americans. And people cannot see that the decisions to close the American market, because this is what I can see, they are closing the market. They are generating a kind of white elephant. Because when you close your economies or the trade, what is the simple in any economist know that immediately the price moving up. This is the most logic way because the imports reduce, but the support, the domestic production is going to supply the goods and services, but it's more expensive. And they cannot see this issue that produced domestically is very expensive. And when you have low productivity, it's worse. In the end, it's look more like a show, political show, more than international trade issue to solve the reality of the problems in the United States. United States, sorry to interrupt you. What I can see is like they want to ensemble in one engine, taking parts from different cars and show off that they have one engine, but the engine is not working. And this is what they cannot understand, what they are doing.
Right, and if this does escalate further, what would be the damage to the global economy, not just the US? The IMF has already warned that tariffs would have a significant risk. Mario.
My point of view, always I said is we want to have a global inflation, and at the same time, unemployment is coming very soon for all developing and less developed countries. And one more thing I want to mention in this discussion is that don't have idea the damage we're going to have and the possibility to have economic depression. In economic depression, exactly like the 1920s, 29 and 28, 29 and 1930s, United States become an economic depression and the world economy become economic depression. And this is a very critical. You cannot see the effects now of the tariff. This one, 6 months later, we're going to see the real impact of the tariff. Now we don't feel the pinch of the tariff, but very soon, after 3 or 6 months, we're going to see the high impact in inflation and unemployment. This is my point of view.
Right, and Ross, do you agree with Mario on that?
Certainly, there's a lot of risk to the global economy. Even the American government and President Trump realize that. President Trump is an optimist, though. He thinks that imposing these higher tariffs will cause manufacturers to return to the United States, build new factories, and employ American workers. Only time will tell whether or not President Trump is correct in that prediction.
And with leaders across the globe calling these tariffs chaotic and unlawful, what message is the US really sending to its trading partners?
I think the message the U.S. is sending is President Trump's message, which is the United States is going to play tough. It's no surprise that other countries are complaining or they're upset about the higher tariffs. But the reality is, and frankly, to be fair to President Trump, a lot of countries have tariff and non-tariff barriers to U.S. goods, and they've had so for quite an extended period of time. Perhaps President Trump's decision to impose higher tariffs is not the best way to address tariffs or non-tariff barriers in other countries. But the fact remains that other countries do impose significant tariff and non-tariff barriers on made in the United States goods, and President Trump has decided that he's going to use the tariff route to address that.
Now, you both are based in Asia, where the US accounts for around 15% of exports. How would these higher than expected tariffs hinder their trade-oriented economies? Let's start with Mario, and then we'll go over to you, Ross.
Look, it's very simple. And people cannot see the situation, the real situation of this international trade war. I call international trade closedness. We come from globalization to desglobalization. No more regional agreements, free trade, and everything this one. The problem is they're trying to solve the American problem, close the economy, and thinking that can revive the economy again. But we need to remember that the world is different from many centuries ago. United States, what I explained to you, is they have many more important problems to solve, socially, especially, that economically. I'm sorry to tell you. And this tariff is using like repression. If you don't follow me, you're going to have this, you need to pay this price. And the funny thing is, who's going to pay the final price is going to the final consumer. It's not the firms. It's we going to pay the high cost of the tariff. It's become more expensive to us, and we cannot get these goods and services at the same price like before. It's going to be very expensive. If have inflation, the consumption is going to reduce and going to have reduction in the growth GDP of our countries. And then this reduction of the GDP is going to generate a very negative effect on economic growth. And going to have, in the long run, we're going to have economic depression, is what I explained. I think this situation of the tariff has become more one political show that a mechanism to solve the real problems of the American economy.
And Ross,
Thanks.
What's your take on that?
It's a very interesting question, if for no other reason that the United States does have free trade agreements with several countries in the Asia-Pacific region, South Korea, Singapore, and Australia. So those countries might be in a better position to negotiate with the United States. Other countries, such as Taiwan, they have an advantage because they export or they manufacture and export 90% of the most advanced semiconductor chips. So they have some card that they could deal with the Trump administration. Other countries, they could say we're the alternative to China, places like Vietnam or Bangladesh, where a lot of manufacturing has moved outside of China to those countries. So each country in the Asia-Pacific region has its own cards to play, and we'll find out in the coming weeks and months whether they try to play those cards and extract a deal with the Trump administration.
Right, gentlemen, we will have to leave it there. Mario Ruiz Estrada in Kuala Lumpur and Ross Feingold in Taipei, thank you very much for being with us.
Thank you so much.
Thank you.
As the tariff wars heat up, pressure is mounting on both US consumers and industries. Rising import costs, supply chain disruptions, and the risk of foreign retaliation could drive up prices across many sectors. This inflationary pressure could limit the Federal Reserve's ability to cut rates to stimulate the economy, while recession risks hover near 50% on prediction markets. Despite these concerns, the White House maintains that Americans should trust President Donald Trump's decision, assuring the public that there will be short-term pain for long-term gain. Retail giants like Walmart, Target and Best Buy rely heavily on imported goods, and new tariffs could squeeze their profit margins and lead to even higher prices. US consumers may also feel the pinch from reduced competition after Trump ordered an end to the duty-free exemption for small parcels from China. Government data shows 1.4 billion such packages entered the US in 2024, with 60% of them from China. Tech firms like Apple, Dell and Intel rely on components from China, Taiwan and South Korea. New tariffs could make smartphones, laptops and other gadgets more expensive. One study shows a top-tier iPhone could reach nearly $2,300 if Apple passes the costs on to consumers. While US manufacturers may benefit from less competition, companies like Ford and Tesla, which rely on global supply chains, could see costs rise sharply. Imported parts for assembly will be more expensive, potentially leading to job cuts and slower production. And retaliatory tariffs from trading partners like China and the EU could make US farm products such as soybean, pork and dairy less competitive abroad. This would hurt American farmers who have lost money on most major crops in recent years. Groups representing US farmers and food processors warn the new tariffs could deepen the strain. The EU has reacted angrily to the new trade tariffs imposed by the US. European leaders have called the 20% tariffs placed on them unjustified and harmful to the global economy. As America's largest trade partner, EU chiefs are now pledging to announce retaliatory measures, but at the same time, they're stressing the need for a balanced response. So what exactly will Europe do? Paul Hawkins reports.
In any fight, how would you respond to the first punch? The Brits are being very, well, British.
We are taking a calm approach, acting in the national interest. And the national interest is to continue our negotiations for a deal with the US, which we made big progress on.
But if talking doesn't work...
I am today launching a request for input on the implications for British businesses of possible retaliatory action. This is a formal step necessary for us to keep all options on the table.
But the UK is a relatively small market for the US compared to the EU, whose counterpunch would carry more weight.
We are prepared to respond. We are already finalising the first package of countermeasures in response to tariffs on steel. And we're now preparing for further countermeasures.
But what does she mean by countermeasures? We know the EU will shortly announce increased tariffs on things like these. Harley-Davidson bikes and bourbon, symbolic American products. But that's in response to previous tariffs. This time around, it may choose to hit American tech and banking giants, like restricting JP Morgan's business in Europe or increasing taxes for Meta, which owns Facebook. It could even limit American companies' ability to bid for EU government contracts. In the meantime, EU members like Spain are supporting industries straight away.
Spain will spend $15.5 billion to protect our businesses and workers, to provide certainty and also to anticipate the tariff impacts.
Ultimately, though, that's not sustainable, as is doing nothing. Because Donald Trump's tariffs will make cheap Asian products like phones or clothes expensive for Americans. And as demand there falls, those same products will flood the European market, making life harder for homegrown producers and putting pressure on governments to raise tariffs to protect them, which is exactly what President Trump is doing.
In other words, they charge us, we charge them less. So how can anybody be upset?
And so the trade war escalates, not just with the US, but with everyone else. Paul Hawkins, TRT World.
Meanwhile, the first ever Central Asia EU summit is underway in Samarkand. Leaders of the European Union and Central Asia are discussing key deals aimed at reducing Europe's reliance on Russia after the war in Ukraine disrupted vital supplies. Let's break down what's on the table. The EU is advancing agreements with Central Asian nations to secure oil, gas and rare earth minerals. These partnerships aim to diversify the bloc's supply chains with Central Asia's mineral resource reserves, seen as strategically important for green and digital transitions. The EU has committed $11 billion through its Global Gateway programme to develop the Middle Corridor, a trade and transport route linking Central Asia to Europe via the Caspian Sea. This infrastructure project aims to modernise railways, roads and ports, facilitating the export of Central Asia's REEs and other critical minerals to Europe. Trade between Central Asia and the EU has surged over the last 7 years, growing fourfold to reach $59 billion. The region has become a vital economic partner, making stronger relations beneficial for both sides. Central Asian countries maintain diverse international relationships. They are deeply involved in China's Belt and Road infrastructure projects, and these nations have strong economic and political ties with Russia, engaging in energy cooperation and trade partnerships. However, the EU has raised concerns that some firms in the region may be helping Russia bypass sanctions related to the Ukraine conflict. Well, that's all from Money Talks for now. From me and the whole team here in Istanbul, thanks for watching.